You're sounding pretty good. Good morning, everybody. How was y'all's holiday? Oh yeah, oh yeah. Good morning, everybody. Adam, Ashton, Luke. Good to see you guys. Yeah, absolutely. So, getting started, you guys that are just tuning in, Rocket Scooter, we are a new trading platform. We have a different style of analysis that's not technical or fundamental. We do positional risk analysis. So, in our platform, we use an algorithm to look for market maker activity and positions. There's a sophisticated way we do this. And we look for different types of hedging or institutional positions that allow us to see basically the sum of people's homework in Wall Street. Instead of looking for trends or patterns in the charts, we look for actual positions to know. The efficient market hypothesis is saying that where people are positioned, that's all the news that could be available. It's priced in, even inside news. So we look for the big positions. Nobody does something like this, but we have a free trial. You guys can check out the actual platform itself. You go to rocketscooter.com, free trial. It's 7 days, not even a credit card required. So there's no downside to this. Check it out and kind of tune in with us. To talk about what we're seeing in the market today, we're just bleeding off that gap that we saw on the overnight. I don't really see anything, especially being a holiday week coming in, starting this kind of ramp into the new year as being anything other than just the market trying to find some kind of equilibrium. I think everybody that wanted to do something is going to do something. I don't expect a big Santa rally post Christmas either. I don't really expect anything until we start moving towards other FOMC meetings for the next year. That thesis I posted and pinned up at the top of my Twitter for a while until it was invalidated was saying that we would hit a bottom for 2022. We said that back in October. We look at two different things. We were looking at employment data, and the theory was as the jobs numbers or the unemployment filings would go up, that the FOMC would taper off their rate hikes. We were absolutely correct on that thesis, and also that inflation would come down as the job pool became saturated with people. So, wages come down when more people get laid off. So that also brought inflation down. We had those two big good things that were actually predictable, and you saw Wall Street also positioning into those things early as October, which caused the bottom. So we were kind of riding that wave too before anyone else was. And then that thesis became invalidated by kind of like the one little thing that we didn't want to see, which is on the commitment of traders. It's a report that's published by the CFTC that shows positional data in futures. We use the S&P futures numbers to kind of reflect the ETF market and ETN market and like index products in the equities world. And so the market makers were very positive from a year worth of selling to them. They were holding, like the net position of dealers are actually positive, which is rare. And in the history of that report, if you guys want to write a little thing down on your sticky notes on your computer and you're learning something, is that you've never seen the stock market crash while the market makers are positive. It's a very normal thing to say that the banks in the middle are going to crash the market on themselves when they hold inventory. They were positive up until about 4 weeks ago, and they finally went negative again, which means the market is now uninhibited to go either direction. So dealers were propping it up since October to redistribute back to the firms, find some buyers or find some shorts to cover. And so since the dealers are now negative, the thesis is invalidating. So while we're still kind of quote unquote bottomed, there is no assisted mechanism from dealers redistributing positions. So we're in this space right now where we're just trying to see day to day if the market shows any signs of imbalance or illiquidity, it's going to move. So what we've been telling our traders and the people that use our platform, you take a day at a time. This is going to be a non-directional market. I'll let some of the other speakers here who are really educated on those types of that type of trading. You're not going to find that really large rally, I think. And again, this is not trading advice for anybody out there. We're just kind of bantering. So I personally think we're not going to find a big rally or a big sell-off or really big moves anywhere. If you get like a really sharp move in the day, it's like get in, get out, and then take like one trade a day kind of thing. Picking bottoms right now is going to be hard because I don't think the market's going to find any momentum until earnings of next season. Remember, Evan talked about this last quarter, is that we're dealing with a thing where, people have produced stuff when everybody went back to work after COVID. We had a shortage, then everybody overproduced at high labor costs and high materials costs. So now we made all this stuff and the stores got stocked with inventory, but they were made at a high price. So as that high price inventory is still kind of making its way out of the shelves, the question is, what are the margins going to be in the companies this earnings season? So when we go to the earnings season, sure, sales will be up, right? Because there's no longer a shortage of like video cards and bread. But the thing is all the stuff that was produced at a higher cost. So while there's a surplus now, sales will be up and profits will be down. I think Wall Street is very much concerned with that. I think FOMC and inflation numbers are news of the past. I don't think that's going to be moving the market at all. I think we're going to purely trade off of earnings to earnings. And I think stock picking is going to be the biggest skill set to focus on this quarter and next. So who are the good companies that are going to make great earnings, good margins on their sales, and then of course, being efficient with cash flow, and laying off just the right amount of people that they're able to stay productive. So that's going to be really awesome. So everybody here listening to these spaces, these guys always cover earnings. Follow all of them. Make sure that when we get to the earnings, we'll be covering them, day by day. So I'll kind of pass the mic over. We get started Rocket Scooter 10 minutes early. We look at pre-market data and numbers. So right now, the market, we have 5 indicators we look at to determine if the market's rational in a positional way. And just right off the bat, we are extremely, we're rational. So market's okay, it's clean. When the market opens, we look at our platform to give us an indication of where a market maker hedging is and where actual institutional positions are. So at about 1 minute after market open, I'll go ahead and start talking some numbers. So right now, I'll just kind of see if any of my co-panelists or speakers up here have anything that they want to say or add to what I mentioned. You boys want to pull up anything?
Yeah, good morning, everybody. I hope everybody had a fantastic Christmas. I hope everybody makes some good memories. Everything Matt just said, I completely agree with. I just don't see any kind of movement for the foreseeable future unless there's some kind of unexpected music drops, particularly related to one of the Fed presidents speaking or something along the line of the Fed or interest rates. I don't think the market's moving a whole lot until we get the next round of earnings, which is in a handful of weeks here. So that means a lot of, unfortunately, all of it are jumping in hell. There's a whole lot less tickets for the vast majority of newer traders out there, because newer traders are primarily trading market go up, buy calls, market go down, buy puts. And there's absolutely nothing wrong with that. I'm not bashing it at all. But the market doesn't always do that. There might be a time in the season where the market just gets a little pop here and fall, a little pop here and fall. I mean, based on we've all heard a lot of the talking heads say, yeah, I mean, 2023, the market could just be completely flat. I don't really put much stock in what the heads are saying.
Welcome, guys. Welcome. We are live on Twitter Spaces this morning, so I'll be doing voice chat on there. I'll just be kind of showcasing the platform here live on the stream and referencing it, but going forward, you guys make sure you go to Twitter Spaces and tune in there. What's up, Sleepy Rain? Go grab the free trial of Rocket Scooter, you guys, and make sure you get that so that you can follow along with us, and we'll be calling plays and things that we're doing in the morning, but we will be live on Twitter instead of here on the microphone. just for like the first hour.
sectionals, neutral trades. So that's about my focus discussion last week. Because one thing that we all have to remember, and traders tend to forget this, is that if the market is going sideways, we can still trade it. That's number one. Number two is if the market is closed, that can be just a gift that just fell into our laps as traders. Now, a lot of people are wondering what do I mean by that? Well, if the market is closed for a holiday, and especially when it's confined to the weekend, well, we just got a heavy dose of free theta decay. Now, as options traders, everybody's like, oh, stay away from, we want to avoid theta as much as we can. Because what's really like these options traders, but two, we can use it to our advantage. So last week, knowing that volume was going to be low all weekend, and knowing that volume may be going
Okay, guys, just right out the door, we are just showcasing, we are rational market's good. We're inside DD bands for both all the indices here. And VIX hasn't really moved that much, and just double checking where we are on the VIX futures. We are above triple B.
It did make it so the dealers and the market makers are now net short on the market. That doesn't necessarily mean that the market's going to close and come all the way down. That's not necessarily the case. It just means that it's going to have a really hard time coming up. So, at least up in a big way. So that leaves even more credence to my point that, well, there might be tug of war back and forth.
So we're expecting like a flat market. Yeah, I agree 100%. And so when the Commitment Traders is a cool report. And now it talks about positions in the S&P futures. And so when you think about like ETFs and ETNs, right? ETFs are share settled instruments that are basket stocks. An ETN is a debt instrument, right? So it has nothing that settles in but cash, almost like a cash swap. So what happens is, if you buy, say an example is like a VIX ETN, they can't go out there, the market makers can't buy VIX shares because there's no such thing. So they go out there and buy VIX futures. So when you look at these futures reports, it reflects the market makers' risk and positioning in the actual ETNs, which in the Commitment Traders mirrors very beautifully with the actual S&P options for like SPY options. We found out that the positions are very similar to the S&P futures positions as well. So basically everything is hedged very similarly around the clock, around ETN, ETF. So what you'll see is that essentially what we're saying is that when the market, we've sold so much to the market makers and they're holding the inventory, they don't let the market crash too hard. Now stock market's open, so I'll talk about that in a second. So if you think about, like, if you remember 2006, 2007, and 8, with the earlier financial crisis with the housing market, and everybody was buying credit default swaps, right? And the banks were paying off the ratings agencies to rate these mortgage bonds as good just because they're diversified until they can accumulate a big enough short that they didn't blow themselves up when they let the market crash. This is how Wall Street really works. So in that particular sense, the market didn't crash, quote unquote, till the banks are short. And that's kind of the stance you take with the Commitment Traders. Now, what I called a bottom in October is because the banks were as positive as they had been, like, basically a decade. So when they're holding all that inventory and controlling the price, it's like the kind of the big, I guess, adage of Wall Street is he who controls the inventory controls the price of that thing. So if you hold all the inventory, there's no way you're going to crash your market under your feet. You're going to find other buyers to take it off you before you let the market fall. And that's why I was having a hard time selling off. So to kind of cooperate with what Ashton was saying, we might not see any movement up or down, but you just wouldn't see the market collapse. There's a lot of people calling for like Chicken Little sky is falling, and it just didn't make any sense that the banks would completely send each other into margin calls by crashing the markets together. They were just holding the price and buying everything they could to squeeze people out into the end of the year. Shorts mostly locking in profits to say they made money, during the sell-off this last year. So it's going to have a hard time doing much, and it's probably going to start accelerating that trajectory to the downside because it's not going up. And I think that that's the mentality I'm going to take going into this new year. And but we're going to take it a day at a time. So the first thing we look at Rocket Scooter when we load up in the morning is we have two different things that are very important. We have this positional risk skew indicator. We call it Doomsday for short. And what it actually does, it's the net sum, or it's the ratio of the number of stocks in the S&P 500 that have opened on the bull side of positioning versus the bear side total. So if you take like the total, the bull and bear side, like the non-flat stocks. And the way that we look at that is we actually look at market maker positions. So if this number is greater than 1/2 and half the market cap of the S&P is bullish. And so that's a really big indicator that positionally at last week's close, we wake up and there's more people that were bullish at the end of the day. So that's the number that we like to look at right when the market opens. And as soon as that comes through here, we'll chime on that. Right now I'm trying to get everything loaded up on my screen. And if you guys, if you want, while y'all are still here, I also live stream. This is kind of a new thing that we're going to be doing on Spaces, as I live stream on Spaces at the same time I'm on YouTube. So you guys can check out my screen while I'm chatting here, and I'll demonstrate what it is I'm seeing as well. So I just posted the link, and give me 1 second. So I'll Ashton or Luke, actually Luke, or hey Soflo, actually I saw you just chime up here. Can you guys chat for 1 second? I gotta talk to my guys really quick.
Yeah, Soflo, what's up, man? What about you? Market's on go. That's okay. Good morning. Can you guys hear me clearly? I'm actually using a different right now. Yeah. All right, cool. No, I'm actually watching a few things, including the dollar index and gold. I started actually buying some gold back in September. Like September 10th is when I started buying a little bit of gold. And since then, yes, it has been going up, and I'm just a little concerned watching the U.S. dollar overall, just because we have been consolidating over the past few days, and I want this to actually show a potential move to the upside. If we do start to get DXY to the upside, I can definitely see the market suffer some more. This is the last 4 trading days of the year, so we have to be very, very careful as far as if you expect the markets to do a lot of things. Given, yes, we do tend to see some, upside moves on the last few days of the year. But, nothing's going to change other than the date, and nothing economically is going to change either. And that's something I really want to emphasize on, is that given, yes, we've aggressively raised interest rates, people are expecting that, we should stop doing that. And I do think we should stop doing that. But at the end of the day, we're still seeing the dollar, gain some momentum even right now. And until, DXY can actually...
Hey guys, just letting you know, we had a release last night on our platform, so our team is trying to get things loaded up. We will have the data connection has been severed this morning, so we will scramble to get that together. So hang with us for just a couple of minutes. So sorry about the delay here. Just kind of, I guess, growing pains. We had a brand new release on the platform, so they're looking at it right now. Let me log out and log back in and make sure I can do that. Hold on. Let's check this out. This is a short, yeah, let's open it up really quick. Okay, we're looking at this right now, so hang in tight. Yes, the resilience indicator coming out being a short, which means half gap, and the market is going to be a short as well. So What we're doing, let me go ahead and let me just really put in that really quick. Okay. You guys, all right, make sure while you're here, get a free trial of the Rocket Scooter platform. Go to rocketscooter.com. At the top right, there's a free trial. So you'll be able to take a look at that. Resilience is short, yeah. So right now there is just no long setup. Market is touching the lower DD band. So right here, this is usually an actionable pivot. So just talking today off of futures, this is something that I want you guys to take a look at. Today, the pivots are going to be 38.39 on the S&P. And then today's lower DD pivot is going to be 10.957. Okay, so we'll have the platform, demonstration of the platform in about whenever they get the servers going up. What we said was that our data pool servers were down, so they're going to look into that. I think usually, everybody's on holiday. That's why it's hard to reach people. So we're waking people up on the breaks. Right now, those two numbers that I posted, those are going to be the actual pivots. These bottom green lines. If you lose them by more than 10 points on the S&P, so essentially that's going to be the gauge of the one today. We call this irrational markets. Irrational markets are the international sign of sit out, do nothing. So those pivots this morning, 38.40. Yeah, absolutely. That's fantastic, Soflo. That's what I love about this panel. Like what we assembled is people that we know. There's a lot of traders. There's a lot of people that do fundamentals. A lot of people do a lot of things. So what I like about the folks on this panel is that everybody here does something slightly different or sees the market slightly different. And everyone here is someone that I think it's personally impressed me. And we're going to rotate a lot of speakers in and out of this as well. We want to make this kind of like a space where you learn not just about markets or market chatter, your similar stuff that the talking heads would say, but you actually learn market mechanics, like how markets trade. We're talking like market makers pushing price and things around. These are folks here that I personally believe are experts in that field. How the mechanics of how markets move, exploiting something cool and different. So I promise you guys will all learn something different in this group. And like with SoFlo bringing up the dollar index, like I love hearing traders talk about the things that I know move the market. So that's fantastic. Instead of being like an echo chamber of what you see in the news, our goal here is to get a step or two ahead. So you'll always hopefully hear ideas that no one's talking about, and it may seem silly at first, but then when the market bottoms in October, 2 weeks after you say that it does, and everyone's echoing hopefully what we say. So we want to try to be the group that pulls ideas forward that aren't necessarily being talked about and trying to gauge what's going to happen. So, a lot of the folks on this panel, many of us, we have engineering backgrounds to turn traders. I'm a chemical engineer by trade. Luke is going to engineering school. Even SoFlo, we all are people that maybe had other careers and go into trading, and we're number hungry, data hungry folks. And so we try to see markets with a different mindset where it satisfies like our nerdy appetite for data. So, and like Rocket Scooter especially, our team was a team of 3 engineers that started off. And so data mining and creating different types of machine learning techniques to pull data and find relationships between things that do and don't matter is what we look for. So we might be talking about reports, correlations, things you may or may not have ever heard of before. So what we tell everybody is, keep a little notepad. You hear something like they said this thing called commitment of traders report. Write stuff down and always come to me after. We can always show you where all these cool things are. There's a lot of stuff available, especially in the last 10 to 20 years, that a lot of folks have never even touched. They don't know that it exists because a lot of your trading platforms, retail trading platforms, they still hang on to technical and fundamental analysis, which is great. It's tried and true, right? It's good for hedge funds and institutions. But for retail traders, it's certainly not powerful enough for you to get all your analysis. And more transparency is available from the exchanges and data feed providers for retail traders to actually explore. It's just not many people who explore it. So we have special data feeds that nobody has in Rocket Scooter, or nobody has yet, just because we're one of the first to start exploring new things. And so you might hear in the last couple of years, a lot of people look at unusual activity and flow algorithms. That's kind of like the new paradigm. And a lot of these newer things are moving beyond traditional technical analysis, which if you really boil it down from an engineer's point of view, you're looking at the shape of price. It's like a shape on a chart. It was a triangle this way with that angle, and we're assuming that it's going to curve at this other curvature. It's like, to me, that always sounded completely silly, or at least incomplete. So positional data is something that's a whole new thing. And it's even a step beyond the unusual activity, because what we do with Rocket Scooter is forecast and predict unusual activity before it happens, because we know where the hedging is going to be balanced, and we know where the maximum order flow is going to come out, so market makers can balance their positions. It's a whole new trick. It's pretty cool, and all the indicators we do have in the platform, we talk about different stuff that exploit a lot of this data, or a lot of these mechanics that really haven't been pressed or looked at in the retail side. So I put up 2 numbers in my stream this morning. Actually, believe it or not, we did have a data outage. So unfortunately, for the first, half an hour, we're not going to be able to actually pull anything on the platform. We were doing some updates, and the guy that runs the server, he's obviously on vacation for Christmas. So we're trying to wake him up to get him to go, push the button and turn it on. And until then, we do have some other indicators we're going to talk about first. So right now, we have this one specific indicator that we look at that talks about, it's called the risk interval, and what it actually is on the NASDAQ and the S&P. And so if you guys want to write these numbers down there in my stream, the S&P is 38.39 this morning. I'll get your wolf in just a second. And the NASDAQ is 10.957. So repeating, 38.39 S&P futures and 10.957 NASDAQ. Those are going to be the only actionable pivots today that are going to dictate whether I trade or not. Losing that 10.957 on NASDAQ right now thrusts the NASDAQ into an area we call irrational. When markets are irrational, they're going to behave very erratically and unpredictably. Typically, you want the markets to stay within a certain range, or else you're going to start to see overhedging, a little bit of crazy activity. So right now, as NASDAQ is pressing through that 957 level, you're going to start to see volume increase and some sporadic choppiness. So in this particular setup, I personally don't trade when markets are irrational. I like to sit out, let it do its thing, and then come back when it stabilizes. So NASDAQ right out the door, and that's likely because of Tesla is just crashing out. And so there is, to me, no setup for me to even want to entertain. So Wolf, go ahead. Okay, so guys, DD Band, Wolf is chatting on our spaces this morning. Make sure you guys follow and like the stream while you're here. There is no trade on the irrational side of NASDAQ. We're trying to get our platform back on. We have just no data today. I think that our black box server is down, and the guy that maintains that is on vacation, so they're trying to call him to ring him up. What's up, David? Squalid King. Oh yeah. So you guys make sure while you're here, these numbers right here, markets irrational. So in irrational markets, we personally do not day trade, or we sell options up here. That's exactly what I do. Selling options up here outside of the band, and not shorting or longing down in here. How much is QQQ and NQ points? Just put them side by side. So it's not necessarily the easiest to guard. It's like 40. I think it's like 41 points or something like that. What it was last time I checked. Somebody here might be able to tell you. One QQQ is like 40 something points. But Norman, just go to the conversions in our trading chat. So I'll show you guys some things right here really quick. In our trading chat, we have a Discord. The link is in the description. I want you guys to click this really quick. And by the way, make sure you get the free trial, because we're doing this really awesome special. For anybody who wants to get it, we're doing half off all your data feeds, everything for life. Go in here in the Discord to get the free access to that. We have a conversions room in here, and these guys will typically know that information. Yeah, so we're letting them know that. So it's a You guys won't find this somewhere else in YouTube. Thank you, man. You're so nice. Appreciate you. I'm looking for this one thing over on the screen. 1 second.
1 hour to 4 hour basis, and maybe look for those opportunities to get a cheaper short in or some puts or some sort of strategy that plays some sort of downside directionality if you like that. That's what I'm kind of looking at this week.
I'm going to show you guys the intermarket correlation table right here, so I'm going to post that really quick. So we're going to look on the 30-day correlations, right? The dollar index is a really strong, like these are correlations. So I'm going to talk about this space right here. Dealers are negative, man. It's not really looking super hot on the COT report. We'll be back live on YouTube. Like, I'm on the Spaces. You guys make sure you go follow us on Twitter and get that link to the Spaces. That's where we're chatting right now. So that's why I'm being quiet right now. In about 45 minutes, we'll be back here. Good to see you. What's going on, Jim Weiss? How's it going? We're on Twitter Spaces, so this is just going to be showing the screen referencing that. But join us on Twitter, and we'll be back chatting here in about 30, 45 minutes. Make sure you guys go to rocketscooter.com, get the free trial. Check it out. Yeah, thank you so much for that. And if you guys, Wolf is linking some things at the top so you guys can check it out. One of the things that we do have is our platform has charting, scanner, and we have what we call like a walls app, which looks where market maker positions are. And we're building so many different things over the next year. We're building, like one of the things we're making, this is kind of cool, we'll be making a journaling tool. Once you can connect to your brokerage account through our platform, the journaling tool will actually study your own habits against the rules that you tell it you want to follow. An example is, I like this indicator, and I'm going to trade when this indicator does this or that. And it will actually monitor your own stuff if you want it to, and coach you algorithmically and saying, well, you know, you broke this rule every single time. The VIX was high, maybe you shouldn't trade when the VIX is high, things like that. So we're trying to take a brand new approach to coaching and teaching traders, not just giving you brand new tools, but also creating, using, you know, the advanced, I guess, skill sets of our developers to build all kinds of stuff that enhances every single thing you've ever had in a trading platform. That's kind of where the name Rocket Scooter comes from. You know, you guys have been pedaling around a scooter like Fred Flintstone for the last 50 years, and we're about to put a rocket on the back of it so that we can actually give you a little more power. So every single thing you're used to, we're going to make the rocketed version of it, and so that's kind of the neat kind of background of where the name comes from. So one of the things, you know, that's going to be very important is just, you know, feedback from the community. So as we're developing and creating cool tools and relationships, even the presentation and things that you guys have always wanted to see in a trading platform, we're a development community kind of like for the people, by the people. You know, people that are fed up. You know, in COVID, everybody was a winner post-COVID, and every single thing seemed to work. And so, you know, I started trading in 2010 after the last financial crisis. So it was the same story back then. You jumped in, everything was a winner, and you couldn't lose until you were losing. And then you didn't know why you were losing. And then, of course, you know, it seemed like everyone that was an expert suddenly became quiet because in reality, it's not the stuff that you've been using or learning. It's not the charts. It's not the technical analysis. Not even the fundamentals that breed great traders. It's somebody that understands how to manage risk, how to manage their bets. And it's the same reason why in poker, it's a different person that wins the World Series every year, but it's the same 100 people in the final 100, that's for sure. Because they understand how to calculate and understand risk in real time, how to fold when they need to fold and not jump back in, how to bet scalably with the amount of certainty they have in their position. So if you have a 50% certainty something's going to happen, you're not going to go bet the farm. If you're 99% certain something's going to happen, you may be more willing to take that bet if A, B, and C happens at the same time. And that is the real skill set of a trader. And everyone here, if you're trying to become a trader or even trying to become a more, educated investor, trading skills are always going to be something you should learn. It's not just let me pick the right stock and hold it. Because one of the things that especially options traders do not get correct is timing their trades. One of the things is, Bitcoin has been collapsing as of lately, and I'll just talk about that really quick. And it's mostly because when markets become very positive and everything's winning, people become more riskier when you're winning. It's called the hot hand fallacy. When you make 2 or 3 free throws in a row, you think you're on a streak. You believe your next shot is going to make it because your previous ones have made it. So you're willing to be a little more riskier. Maybe you'll close your eyes when you shoot the ball. It's the same thing as, okay, well, let me buy crypto. It has promise for the future. It's a new growing thing, so people are going to flood into that. And then once that boosts, then everybody's going to go into NFTs because that's even riskier, right? And on the surface, it sounded silly, cartoon images. And this is not a debate against those things, but they are, by Wall Street's definition, very risky assets, right? So people get riskier and riskier and riskier as they diversify in a bull market. That's exactly why. Just imagine you're somebody like, Snoop Dogg, and you're like, you're a successful career, you have all this money, and you're like, okay, what am I going to do next with my life? You go get a gin, you can make a cologne, you can go get clothing lines, you can do whatever, you can buy NFTs. Your portfolio manager is managing your tens and hundreds of millions of dollars and pressing in every corner it can just to diversify, because that's what you do in a bull market. You spread your money out. So when everyone's diversifying, it creates bubbles, like localized bubbles and things. And so what we've been seeing are those bubbles collapsing one at a time from the outside in. So NFTs, those popped first, crypto popped second. And people right now are saying, well, get the dip on crypto. It's going to move. It's time to get in. And so the thing is that the momentum is even gone for the equities market. So if you guys are trading any of those other things, just think of it like this. Those other things that are riskier will not move until the equities market finds a bottom. Wall Street needs to come back in from the bottom first, which means you need your blue chip stocks, you need your McDonald's, your Caterpillar. Those things need to find a bottom before people are going to start inching their money outward into those other riskier assets again. When I say riskier, it's just because there's no tangibility in that. Like you're not paying your taxes in Ethereum, and your grandma's not buying a loaf of bread at Kroger's with Bitcoin yet. So at that particular point, you're not going to see momentum from utility. Right now, people are scared to put their money somewhere because it's a recession. That hoarding mentality is really good. So once you see Wall Street start piling into the blue chips, you'll start seeing the riskier stuff come back. So when it comes to what you want to see in stock markets is you want to see this positional data, especially what Rocket Scooter shows you, showing that the market is back to being bullish, generally just big, high market cap blue chip stocks, and we're not seeing that yet. So right now people are just going cash heavy, and what the guys keep talking the dollar index, you're going to start seeing some demand for people just kind of, I think, slowly dissipating their risk into a couple places and just sitting still. And it could be a year of this. I mean, it could be a couple years of this. So we don't know, but what we do is we wake up every day. Rocket Scooter is very good at this. It's going to tell me if the market's bullish or bearish, and if it's neither, then I'm going to be neither. Or I can do what some of the folks here are really good at, like Ashton, for instance, is I can sell options and be on the sell side and become a dealer myself in a way, because you are able to make money in the way markets go up or down. What I started off this little speech about is that most people just try to come in and start trading and say, well, I'm going to guess if the market's going up or going down. But one of the things is you get penalized by timing it incorrectly. Now with an option, your theta decays, which is your premium loses a certain amount of money in real time. So typically your trading platforms will present theta to you on a decimal number, and that's essentially the day's estimated loss of premium. And theta is a big thing that options traders don't understand. And so if you go buy a put or go buy a call, I mean, you scan your Twitter feed right now, there's somebody buying puts and buying calls right now. Smarter traders will see that the market's likely going nowhere and identify that beforehand and try not be directional. If you buy a put or you buy a call, you're making a statement, I want the market to go to this strike as fast as possible starting now. And if the market doesn't have a lot of momentum, or a lot of volatility because there's no liquidity, which is what we're seeing today, then the market's not going to be directional. And essentially you could possibly be wasting your money trying to pick a direction. So it's not just, back to the poker player illusion, it's not just pick up or pick down, but it's pick a style of trading that works. And for instance, when the market's non-directional and choppy, one of the things that folks do is sell options and sell them really far out of the way where there's a very small chance of it going in the money, and then trading that way. There's different ways to trade. Again, selling options is risky, and of course, it's not financial advice. But learning different ways of trading is what I would recommend everybody here do during the next couple of months, because the market may not be directional. So learning different ways to hedge your portfolio, or different ways to hedge your risk, or different ways to scale your bets based on how certain you are of the market. Also, studying the tools that we have, which will show you if markets are illiquid. We show you where liquidity is. We show you where market maker hedging. We give you high volume pivots. Like in an elevator pitch, what Rocket Scooter does is it will show you high volume pivots before they approach. We will show you the highest volume of the day. Each one of our calculations predict volume. You can't predict market pivots. You can't predict where buyers and sellers will appear, but you can predict behaviors of automation. So we have 15 indicators. Each one of them will predict volume. The two I talked about this morning, those were the S&P numbers and the NASDAQ numbers, and 10,957 on NASDAQ futures. And you see right at 8:45 or 9:45 this morning, there's a humongous red candle where NASDAQ just dropped 15 minutes off of that high volume pivot with a huge volume spike in futures. You guys are looking on my screen on the stream, you'll see that big volume spike right here. I'm going to draw a circle around that. That is one of our calculations. So that was there since the futures market opened. So at 5 p.m. or I guess 6 p.m. Eastern yesterday, that number was sitting there, and that is today's. The volume was almost as high as the opening volume. And so predictable volume essentially narrows down what all possibilities could be into a few actionable points. It's like, okay, I need a face card in poker. Well, you don't have to, I need a jack or a queen or a king. Well, they have, or say like it's, in blackjack, they have the same value. So it's like you just need a face card or a number card. And so this is like an example of a face card. You have one particular thing that can create the level you want, and all other levels between here and there, they don't matter, because there's not supposed to be any reason for people to buy, and if people do, it would be random anyways, so not even technical analysis would pick it up. So if you have predictable volume, essentially you know where traders should be if it matches your side. An example is if I was a bull today at 10,960 on NASDAQ, or 957, we would have got to that level, and that volume spike would have come, and I would have expected it to bounce. And since it didn't, and it's now below it, now I know to stop out long and not take a long for the rest of the day. And so today the market could particularly collapse, and I wouldn't be susceptible to having any long risk. So that's kind of the examples of it. The levels, right now, go for it. we're actually still trying to get our servers on for our platform. So unfortunately, yeah, today we actually don't have Rocket Scooter actually. Unfortunately, has our data servers are down, and the holidays have one of the guy that manages is out on vacation, so we're trying to wake him up to turn the servers on. So as soon as he does, we'll have those numbers. But unfortunately today, of all things, coincidentally, we actually don't have our all of our calculations up. We just have a couple of our things. So the S&P level today of 3839 on S&P futures. That is the only actionable long pivot that we have for the S&P. So that is actually tapping that high volume pivot right now. And that is where you're going to see activity. Actually, when we touched it just now, there was a volume spike right there. So this is if there's a rescue spot, it's only here and nowhere else. If we fall below here, the market has really no support that I see. So Doomsday bands, guys, on both up and down. Can I turn on the music? Oh, I didn't know music was playing. Sorry about that. Not Sam Smith. Not every last couple of weeks we do releases on Friday. So just because it was the holidays and we released something didn't take. So we made an update to the platform, and then just something just kind of. We're working on it. Just growing pains. I didn't even know the music was on. I couldn't even hear it myself. Here, hold on. It's really loud. I can't even hear anything. Oh, my bad, guys. My bad. Let me. I didn't even know this. Hold on a second. Let me turn this down. Sorry about that, guys. Last thing I want to do is blow your eardrums out. Let's go here. There, that's better. How's that? Thanks for letting me know. Box Live, News Live stream 24/7. Can I turn on the music? Yeah, no problem. But listen, guys, this is the thing I want to tell you. But there is nothing. The market's irrational, anyways. There is no trade. So, in irrational trading days, there's just no trade anyway. So there's really nothing to go off of and say. So we're not even trying to find plays. We know from the calculations, get out, stay out, so we sit out. That's the beautiful part. There's no reason to worry about. So luckily for us, it's a rational day, anyways. So when the market is outside of this doomsday band right here, outside of the span, there is no actionable day trades. The only thing that people do here is they'll sell premiums. So for instance, actionably above the upper band. So what a lot of folks do here is they will buy calls right here. I'm just going to draw it on my chest. So I'm not making any trades today, but a lot of people will do is they'll buy like calls right here, right? And then they will sell calls here in a vertical spread. Do you see what I'm doing? So essentially the market's irrational to the downside. You want to be long if it pops back in, but if you sell premium like outside of the bands, that's what people are doing. So they're gonna sell vertical credit spreads, right? Do y'all understand how that works? So essentially, when the market is irrational down here, we're gonna expect it to be choppy and just all over the place. Selling premium, likely bet that when you're down to the downside of the band, you very rarely, without a catalyst, go to the upside today. So 0 days today are likely to pay out outside of this band here. And then, of course, to hedge against this gaining delta, you're going to have some higher delta, more expensive calls here, and establishing a net credit is what most people do. So, as an example, right? And I'm just going to put like a little.
There's no one on the face of this earth that's going to tell you what's going to happen next week or the next month. The Fed raising interest rates, raising interest rates in January, which is going to change the narrative, and they're going to come out and say something new, or just stick with it.
Let's just kind of let this here. So, like the only in irrational markets, the only thing that any of us do. Does that make sense, everybody? Yeah, absolutely. I'll show you guys one thing. So as we're building out our platform, we have a very nominal data feed cost, and of course, a subscription gives you access to the charting and the scanner and all the parts that come with it. We are doing this thing for everybody that does want to join. Again, Wolf will give you his link for this, but you basically will get a half price of the subscription. It's only $100, so it'll be from 200 to 100 for the rest of your life. And of course, you'll have all things unlocked. So that's what we call the premium version. So once we get futures data and crypto data and all the different data feeds in there, all the different tools that we're going to make over the next 3 to 5 years, people could a la carte $300-400 a month for the different pieces if you want to trade all of it or have all the different indicators, and you'll still be at $100 forever. So it's kind of like that early bird, that gym that they build down the street, opens up and you get that $20 membership before it's $200 a month and you lock it in forever. We really want to support the drive of building a modern day platform, and have a very substantial user base come through and really support this whole new wave of analysis. And so, for the reward of early birds, it's just like any trade. If you get in first, you're the one that gets the better reward. So we want to make sure that even in that, you guys understand that if you want to check us out and you like it, you can have all the stuff, all the data, everything, and it's only going to be half price of what it is now, but 100 for life, and never go up. And that we're very confident you guys will learn something new, especially if you have learned something new today. Put your trust in this team here. All these folks on this panel use Rocket Scooter. And the idea is that we're going to keep building things that are going to be helpful to traders, especially after 2020, when a lot of traders got burned or they found out that their analysis really was just, you know, not as strong as you thought it was and you want something new. So go ahead, Wolf.
No, just second you on all those points, and then I was gonna say we had a couple more speakers right now. We actually had our friends from the Trading Camp Pod.
Oh, come on up, guys. Come on up.
What's going on, Matt? Yeah, how you doing?
Hey, buddy.
What's going on, you guys? Looking at today in the market. So I actually have a short bias today, based on the open. But what is interesting is the 380 level. So right now in the Discord, I opened a short. I actually added some of the SPXU comments. But our guys are really just watching the 380 level, waiting to see if it's gonna break. But I guess the interesting thing coming in this week is the Santa rally bias. I mean, seasonality, in my opinion, doesn't play too much of a role when you're in the midst of a bear market. I'd love to see things go higher, and I think we have a lot more fun trading the long side. But we'll have to wait and see. I think that today is really going to set the tone for the rest of the week. But it may be a low volume trading week, given that we are headed into the new year, and most of the world is probably vacation. So we'll see what happens. But I really just wanted to jump up to talk about Trading Camp. For those of you that are unfamiliar, we've done interviews with both Matt and Wolf. We recently did the Wolf episode. We released that last Sunday. So if you guys haven't gotten a chance to listen to that, you could go over to the Trading Camp Pod page, give us a follow, and check us out. We've probably interviewed your favorite FinTech trader, and we've definitely interviewed traders that you haven't heard from. So I think that it's a really good way for you guys to kind of get an idea for what these traders that you're likely following on FinTwit are all about. And so I highly, highly recommend you give us a follow and check out our page. But thanks for having me up here, guys. I appreciate it. Good stuff, man.
Yeah, definitely good stuff. And actually, they just did one with Wolf 2 weeks ago, and so I listened to it when it first came out. I actually listened to it. I know that sounds like such a dork. I actually listened to it in the car driving home from Dallas for the holiday for this last week. So it's a great listen. And what I love about Trading Camp guys have this really cool way of getting all your favorite traders front and center. And basically, they just we talk about our stories or where we came from or how we all came to be. So you guys feel free to give that Trading Camp podcast a follow, and of course, follow all the speakers here. Everybody has something new and unique, to bring to the table. And as you guys come to this Tuesday morning space, you really want to make it very special for everyone. So at least, hopefully, every time you leave here, you'll learn something. And a year later, maybe have a notebook full of little tidbits from all this group here. Just to kind of go one more thing before I pass the mic on. I talked about this morning, and here's just kind of proof of where high volume pivots come through. Now, again, don't say like these guys are wizards or, these guys have some magic crystal ball or something. Remember this morning, the first thing I said, if you rewind, was at 38.39, the S&P would have a predictable high volume pivot. It's literally on my screen right now, circled, and you can see there's a little high volume spike exactly where I'm showing, exactly what I said, exactly where it would happen, and there's exactly what you expected to happen if you know what we know. And so I said if the market's going to rescue, it would rescue itself right there, and look where it's bouncing. Doesn't mean it's going to be bullish there, but what it does mean is that there is some merit to this style of analysis when it comes to me not buying the dip or shorting at the right or wrong place. If I think the market's going to pivot right there, I'm certainly not going to initiate a new short right there. And if you guys have been listening to what I've been saying, it's almost like a play-by-play, like you're watching a basketball game. We're calling the shots as it's happening. And this one we just said before. And so it doesn't mean that, again, I could predict that the market's going to bounce there, but I can predict there'll be high volume there. And so if I'm a bull, then I'm going to long there, expect the volume to push my way. If I'm a bear, I'm going to expect the volume to come and not push my way. And my decision would be made there as an example to how I would use this style of analysis to trade. I didn't say anything about the average. I didn't say anything about the time frame. So one thing that we do eliminate for new traders is this one kind of thing that is called multi-time frame confluence. And it sounds like a very complicated thing, but essentially what it is a very weak way to try to overcome the shortcomings of technical analysis. All technical analysis does is take price and volume data of the past and make an inference about the future based on the shape and amount of those levels. It's like you put a bunch of numbers into an equation, it gives you a number on the outside. There's no smarts or logic to it. It's just a straight continuous equation. So you can't predict the future from past behavior. If someone bought 1 million shares yesterday, they created that momentum yesterday, they're not going to be buying again today probably. So to take the past behavior and predict the future is always kind of an incomplete picture. And that's what we want you guys to understand, is that you have the shortcomings of that is that maybe your moving averages cross over on the 1 minute, gives you a bullish signal and you're a bear, and you're like, oh, okay, well, let's look at the 5 minute. All right, it's a bull signal. The 10 minute, ooh, it's bearish on the 10 minute, bullish on the hourly, and bearish on the daily. And it's like you're just curve fitting to what you want to see, and that is the slippery slope traders get in. Multi-time frame confluence gives flexibility to the trader who doesn't know anything to just change one little button on their chart. Let's change that 1 hour to like 1 day. Okay, good. That agrees with the position I'm in. So instead of day trading this, I'm going to swing it, right? You're now shifting your trade plan to something completely random because you found a time frame that matched what you wanted to see. And when I describe it like that, it should scare you out of what you do, if that's what you do, because that's a very silly thing to do, is to change your bias to match a time frame that you think it'll be bullish on because of past history and you're just zooming out on a chart. That thing is really what gets technical analysis. And people do that because they want to try to find, okay, this is the time frame that it maybe works on. And the more you do it, the more you just realize that it doesn't actually give you anything but more complexity with no additional benefit. And so what we did was, in our calculations and our techniques, we use no time frames at all. As a matter of fact, I do this funny thing where I say, give me, a stock ticker in the opening price, and I won't even look at the chart, and I'll draw what I think it does for the day without even ever looking historically at the chart or anything, to prove that you don't need to do that. I'm really good at doing that. Obviously you could practice it and get good at that little, bar trick as well. But the idea is that, traders tend to clutter up their screen with hundreds of charts just so they can look at Apple from 8 different angles, but you're really looking at the same thing. You just curve fit to match your bias, and you call it confirmation bias, which means if you're a bear, you're going to cycle through psychologically all different kinds of charts till you find a bear chart that looks good on that time frame, and then all of a sudden I'm bearish maybe for a month because it's bullish today, but I'm going to hold on longer. And that is the slippery slope that blows up trading accounts. And as you guys are here, everyone on this panel is a trader. They're not just a talking head. These are people that understand that mechanic and understand that you can't just shift as a new trader. You have to have some kind of rule-based system that doesn't allow that flexibility. And so in Rocket Scooter, there is no time frame, and the number is the number for the entire day. No matter 1 minute chart, 5 minute chart, an hour chart, volume will appear at that price just like it's circled on my screen. And what that does is it keeps you from having that lever that you pull that allows you to skew your risk into an irrational place yourself that has no real reason other than you want to see it, so you're going to look for it till you find it, instead of look at the evidence in front of your face that says get out of that position right now. And as we wrap up this final 10 minutes of our space here, if you guys go to my channel, my YouTube channel, I did link it, or I tweeted it on my feed. Give the channel a follow, like the stream. I'm looking at that pivot that I circled. It's right in front, 38.39 on the S&P. Not necessarily bullish, but as you see, that is one of 15 Rocket Scooter calculations. We call it Doomsday, and actually linked a video that's a little 10-minute video that describes what it actually does. And this is an exploit of futures and futures hedging. And again, you don't have to understand anything about futures or options or any of this stuff to really take advantage of what we do. I just like to describe under the hood how it works. But as a trader, what we will show you with Rocket Scooter is that we'll show you where the markets are liquid or illiquid, how to find setups, but really, and most importantly, is how to plan your risk. How to know if you're certain the market's going to go somewhere or not certain the market's going to go nowhere. And so today, I said I'm neither long nor short. It's probably going to bounce 38.39 at S&P, and it did. Did I make a trade? No. From 9:30 until now, has the market gone anywhere? Actually, no. The market has traveled a bunch, but gone nowhere. And the joke I like to end with is I posted this a long time ago. I call it the bath towel theory. Is that right? When you grab a towel off the shelf after you take a shower, you unfold the towel. You're actually clean on the shower, so you have clean water on your body. You actually take that towel and wipe clean water off your body. So the same thing in a washing machine is you put clean water on a towel. So essentially wash the towel by using your body to dry off with. Then you take the towel and throw it in the dirty clothes. Then you throw it in the washer and wash it again. Then you dry it, fold it, put it back, and repeat. So a towel actually travels a lot of distance, but really goes nowhere. It's still on the shelf and it's always clean. Technically, your bath towels never technically get that dirty. So the funny like comedy of that is that markets tend to travel a lot, like a bath towel, and go nowhere, and really just kind of stay folded on the shelf. And right now, the S&P is 38.70, like it was when it opened. That's exactly the first thing I told all my traders this morning. It's probably going to travel a lot and go nowhere. And the joke was we said that one time and everybody says, oh, it's going to do the bath towel thing today. So in reality, you can see that the markets may not be directional, which is why when you know that, the next step is how do I trade, not should I long or short. The first thing you see at the top of my screen is a design of a credit spread, which is the type of trade I would do in this environment. And again, we teach you with Rocket Scooter how to see that, how to plan for that, and how to know, okay, if it's a directional day, I'm going to long puts or long calls. If it's a non-directional day and it's volatile, I want to sell calls and hedge against it. So if you guys go to my stream, you'll see as soon as we get out of the spaces, I'll be live. I'll be chatting, do some education on this. And of course, follow any of these speakers here because they are all really, really, really good at different things. Each one of them will teach you some completely different way to trade, and all of it is going to be not heavily reliant on that traditional status quo of technical analysis and those failures that come with it. So this is the crew that's going to try to find better solutions to things for you guys. And we're glad y'all tuned in. Like I said, we have a free trial, 7 days for the platform. Your data feeds come with that. And of course, we'll teach you all different indicators, whether you're a swing trader, an investor, a day trader, doesn't matter. We have something that we've made for everybody. Feel free to give us a follow. And as we continue to develop, the most important thing is you can be a voice of the community that says, hey, I've always wanted to have this one thing in a trading platform. We're the people that'll make it for you. So like I said, we have a huge development team and we're going to continuously build something. And we want to be the top trading platform on the planet as we continue to grow. So feel free to stick with us and come every Tuesday morning. And I'll pass the mic on. Everybody wants to kind of close out, talk about what you're seeing today, if y'all took any positions or anything. So today, my call was I'm going to sit out. The market's going nowhere. And it looks like I nailed that. Didn't lose anything, but didn't make anything. But a loss of 0 is still a win. So thanks for tuning in, guys.
Yeah, great stuff there from Matt. Again, those links are just picking up in the space if you want to check it out to follow up on that. Again, we'll be live trading another couple hours here as well, so you are in the right spot if you're looking for that. I know people are looking for some of this inspired stuff. We're going to dive a bit further into that in the upcoming minutes. Jaguar, I want to go to you shortly, but before I do that, some of the other speakers I think are going to be popping off at 10:30, and I think you might still be on here, so I'm just going to hit them, and then I'll come back to you if that's okay. Sounds good. Cool. Luke, you got any other stuff in regards to trading too that you want to share?
Yeah, I love listening in on these spaces, and all the speakers are amazing, and I love learning from everyone. Thanks for having me up. But to close it out, I didn't speak much, but what I will say is I agree, especially, with SoFlo and Ashton when it comes to the macro and next year, and you're trying to formulate, your thesis going into 2023, and I'm one of the more bearish
We will be back to talking in about 5 minutes. So hang tight, guys. Make sure to like the stream while you're here. Slam that like button down. Smash it. And we'll be ready in just a second.
Those things line up. That to me is a solid trade, goes on the watch list, and it's likely opportunity that can possibly make me some money. And then I go into the positioning. So it doesn't go on the watch list if I'm not seeing those four things. But those are really my key rules. If you want to know more about why I use those key rules, give me a DM here on Twitter as much as possible. Thanks for having me on. They're amazing. I learn something every day. I'm going to can't wait for the next one. Have a great one.
Awesome. Great stuff. We appreciate that. Ashley, anything else you wanted to share here? By the way, definitely, listen, audience, I'm not closing out the space. I just know that some speakers are going to be rotating and some new speakers coming up, so I'm just giving some of those a chance to have to puff off. But do stick around. I got a bunch of really great traders coming in here.
Yeah, I got a couple different things. Number one, my outlook for 2023 is not really bullish. It's not really bearish. It's actually more bullish than anything else. Just from a fundamental standpoint, one thing I've learned throughout my trading career is that if everybody's saying one thing, usually the exact opposite happens. So, I mean, everybody is bearish, including all the talking heads. You see on every major media network, every article, blog, you can possibly think everybody's bearish. I would not be surprised. I'm not saying this is going to happen, but I would not be surprised if the Fed actually cut rates in 2023. They're saying they're not going to, but Fed has done they've said a lot of things that they're not going to do, and they've done the complete opposite. So I'm just saying, I'm not calling that happen. I wouldn't be surprised if it did. And that does happen. Markets make a nice run. But all in all, I'm more neutral for 2023, which is perfectly fine because a lot of people are wanting the market to go up and up and up and up. It depends on your time frame, right? If you're investing for the long term, no, you don't want it to go up. You want it to stay exactly where it is for as long as humanly possible, or maybe even come down, because that way you can accumulate shares of quality companies. For crying out loud, if you look at Google or Apple or really any of these big companies that have really high free cash flow, man, I mean, we're talking like dumpsters that bottom of the barrel price like PE on some of these companies is just great. Like PE ratio on Facebook or better than an example is like last time I checked it's like close to 10, which is insane. So what that means is that you can accumulate a lot more shares than you would otherwise. And then what I like to do is my philosophy is primarily selling premium is, hey, if you have a nice position in a quality company, generally they also draw opportunities. So if you have, let's say, 100 shares of Google, sell some covered calls against that, and then you can also do some cash secured puts, and then get 100 more shares at a cheaper price. So that's my methodology for 2023. And then as for Rocket Scooter, I'll say this: I've been trading for a long time, and I've had a lot of different brands, platforms, tools, etc., trying to recruit me, saying, "Hey, we got the best thing since line spread. Come be an affiliate or come work on our team, build our countless, right?" And I've been watching Matt. I've been working with Matt for a long time, and I've been watching him from afar. And I'll go back to the whole notion that people say, "Well, the stock market's manipulated." Of course it is, guys. Of course it is. We all know this. It's no secret. They're not trying to hide it from us, right? Now, what they are trying to hide from us, where and when and how it's manipulated. That's what they're trying to hide. And Rocket Scooter shines a big fat light on all of that. And once I started getting into the tools and I'm just like, oh my gosh, this I've never seen anything like it. I've been trading for it. So whenever Matt starts talking about some of these philosophies that in the tools that Rocket Scooter offers, he means it. And I've seen it firsthand, and I have been embedding it into my own trading strategy for a while now. And some of the things that I've seen on that platform is just like, you can't make this stuff up. Like it's just incredible. So bravo to the team. I'm excited to be part of it. More to come from Rocket Scooter for sure.
Awesome, Ash. Appreciate all that and really great stuff. And everybody wants to check that out. You can that is kind of my timeline. We are over our time at 10:30 though, and we've got the Seeking Out some up here, so we're gonna make that transition to our trading space with them. So looking forward
Yeah, thanks for coming, guys. Oh, I love Seeking Alpha. I will stay here and listen to that. How you guys doing?
What's up, Daniel? Going. Good, man. How are you approaching this market today? A lot of downside, huh? Man, you know I like to watch the futures. Have you seen the gold futures just completely ripping today? Yep. Man, what a something thing to watch. I'm also watching the bond market, as you guys know. Yeah, Daniel. So, a fan of watching the bond market and the yields on the 2, the 5, the 10, the 30. The yields are just increasing today, which obviously lets us know that the bond market thinks that there's a lot more downside to come. So that's obviously correlated with the move I'm seeing gold right now. And we're seeing the pullback. But remember, I mean, last week of the trading year, I was hoping for the Santa Claus rally just like everybody else. But this year, it looks to be a little bit different. Dude, I wish you joined up like an hour and told me about gold. I would have bought some GX, dude. This thing's flying. Yes, when they come out of the bond market, and honestly, nobody's going to crypto anymore, so where does it go? Go to gold.
All right, guys, we are back. Okay. All right. So let's really quick. Hold on one second. On that. Okay, guys, welcome back to the stream. Spy for another week. It's possible, yeah. Well, we're not seeing a lot of physical downside, I guess, to the market. There's that doomsday pivot, right? We talk about this one. This is a very important calculation, and we could go through and teach some things today. Right now, we're experiencing our data servers went down for some reason, and our guys that run it, they're all on vacation because of the holidays. So make sure that they get that thing fixed up. But either way, what we can't really demonstrate the platform today, unfortunately, but we will as soon as it's back on. We'll have an information session. But today we can actually teach something. So, is anybody trading anything today? Y'all want to look at something? I can walk you through some of our indicators that we do have, like right out the door. That don't rely on the plan. These are manual calculations that we do. We call it doomsday. What it is an indicator that looks for deviations, how far the futures market can drift away from the equities market. And the equities market is closed overnight, so futures are supposed to predict where markets will be in the future. So essentially, if the futures markets are going up or down, it's forecasting where our market's going to be based on other factors that are outside of our market. And typically it's going to be the foreign markets, right? So when our markets open, other markets are closing. In the way the globe spends, you have Australian market, Asian market, European market, and then US market, and open and close in that order. And they overlap. So in our session overnight is typically when Asian markets will open. Japan will open at 8 p.m. China's markets will open at Shanghai, Hong Kong. Like they will all open at 9:30, and then of course they'll close right after, right at like 2 o'clock or 1 o'clock, depending on daylight savings time. And then European markets open then. And so as those markets are going up and down, our futures are going to go up and down. Assuming if they're crashing, we'll probably crash, or if they're rallying, we'll probably rally. So in futures, typically the market does not move beyond a certain range. And that range is set by margin requirements, just sophisticated calculation that essentially blah, blah, blah. It is a level up or down. The futures market does not deviate to pivot off course. If it does, the markets behave a little erratically. Imagine hydroplaning on a road. You can see before your very eyes, the upper band typically doesn't break, the lower band typically doesn't break. And you can see right here, these bands are anchored at the end of the day. So every night, and this will be in our platform probably in about a month or less. Right now we do the manual calculation, which is great because I had it prepared. But what you'll see right now is that the market does limit itself from breaking out of that band and becoming sporadically bullish with no real mechanism, right? The market might drift up a little bit or drift down a little bit, but if you break outside of these bands, the market behaves very irrationally. And so what we do know is that at the edge of these bands, there's always predictable high volume pivots no matter what. And it's one of the neat things you have. And what we give you this number, there's a bot in our Discord that gives you these numbers, and it's a calculation that we run in the cloud and it publishes it to that. As soon as we get futures data in our platform, which will be sometime at the first of the year, we'll be able to display these bands as well on the Rocket Suite platform itself. So right now, this lower band is high volume pivots. Look at 9 o'clock in the morning, or sorry, 10 o'clock Eastern. There's a high volume pivot there. And why, right? What's going on there? Now, there was a news effect, that day, but still, there's volume that takes place at these levels, and the market tends to want to stay within a predictable range. Now, here's what happens, right? When you break outside of the band, the market becomes irrational. Imagine this: it's not bullish, it's not bearish, it's just irrational. Means there's no rationality. And rationality means an equation or a logic set or something that will predict. If it goes up, it should go up, or it should reverse. There would be a rule. Irrational means no rules. It's going to be just basically no man's land, choppy and flat, maybe rally and sell off. There's 100% certainty in an irrational market that you can't predict where it ends up. All of your indicators will fail. You will see markets sporadically reverse, markets rally and keep going, markets just go up and crash. Nothing up here is predictable. All of your indicators will fail outside of the band. So if you're taking notes, outside of the band, indicators fail. Look at this one. You broke outside of the band. It's just wide, choppy, and flat. It goes nowhere. You probably chase longs and chase shorts, and both of you lost. Here, outside of the band, it collapses and then randomly rallies halfway back up. Outside of the band, the market is not predictable, and so we don't initiate day trades. What we do is if you're outside the band on the upside, we'll sell options down here. If you're outside of the band on the downside, we'll sell options up here. If you're inside the band, we'll scalp that all day long. And that's how I trade. So you'll notice that the bottom of the band is a high volume pivot no matter where you go. And this is one of the most predictable things that we do have here. And it's very, very, very easy to set up and do. It's literally one number that you can draw on your chart every night to prep for the market. And so futures markets will open at 6 p.m. Eastern. Where is my hourly chart? Let's go to a 5-day, and I'm just going to pull this front and center. This is one of the most important calculations we have, because if the market date opens irrational, most people will say, okay, let me short the market, right? Okay, maybe you can short and make some money, but look right here, it's irrational. If you shorted, it bounced right back up. So when you're outside of the band, the market makes no sense. And in bear markets, you will get a lot of days like this, and where you just basically choose to sit out. And as a trader, choosing to sit out and not chasing the short, as you see, was a great example. If I sat out here, I didn't lose anything. If I sat out here, I didn't lose anything. And so outside of the bands in bear markets, we just don't initiate day trades here for a real reason, right? You can buy the dip and it crashes against you. You can buy the dip and it rallies. You're basically flipping coins. And so if you're not playing the game, you're not going to blow up your account. And that's what we teach people. You want to have a nice rational day to make a day trade or initiate a day trade. Do we all understand what that means when I say irrational and rational? One second, guys. right, guys, we are back. Welcome, welcome, welcome. How much percentage target of return per month? I'm not really sure what you're asking as far as how much you can expect to have return using our platform. Like I said, we make no promises or guarantees of any type of return for yourself using our stuff. Unfortunately, that is per person. What we will be doing in about 2 weeks, as soon as I get back from my New Year's vacation, that I'm going to be going on at the end of this week. As soon as I return, I'll be doing a live trading challenge where I will take a small futures account and then I will be live trading it just as high as it can go. The last small account challenge that I did had had probably, I think, 9 or 10 months of length. I did it on YouTube. Everything was fully streamed live. There were no days where the platform wasn't on the screen. You couldn't see the entire history of the account for that challenge. You couldn't see like the performance stats. All of that will be shared or was shared live, and it will be shared live again. We ended that challenge so that we can actually go build Rocket Scooter, and then once Rocket Scooter is built and released, we're back to do the same thing. So like I said, I'm going to trade just S&P and NASDAQ just to show how I use my tools for trading live, and you'll get to see all the stats yourself. So tune in every day, and you can see the percent target of my return per month on that account. So we'll see. Like I said, my stats don't necessarily imply or predict your stats or your gains in the market. Of course, are susceptible to your ability to handle your own risk and manage your own positions correctly. So we're glad you guys tuned in today. Sorry the platform's down. We're still working on getting our data feeds and stuff going. So, but market was irrational. So kind of like just sitting out and chilling on this anyways, letting it do its thing. On the screen, I am showing a pseudo credit spread that is a trade. Hypothetical, I didn't take this trade, but this trade would be fully winning and establishing the full credit. If I established this on a 0-day setup, for instance, with SPY options, had I bought calls right here and sold calls right there, these are likely to expire worthless, hopefully, if we continue the same trajectory of not breaking outside of the band. So actually, trading inside the band is maximum profit on this spread. Not only will I get the full credit established, but I'll get more than that established credit on the delta gain from the calls that I would have bought going in the money. So not only had I made this trade against hypotheticals, I didn't actually make any trades today, but had I made this trade, these calls would actually be making money, and these calls would be making all of their money that I sold. So this particular credit spread was a great pivot off of the Doomsday Band limit. This is set at 6 p.m. every day prior, which is a predictable high volume pivot. You can see right here where I drew this circle. This is a predictable high. Doesn't predict that the market pivots or reverses. That's relatively impossible. But the high volume is predictable. That is on a daily basis we can predict where high volume will be. So I don't know if the volume is buying or selling there, but I know there is volume, so I know that this is the area I need to watch. If I'm a bull, I'm only a bull from there and nowhere else. And if I did take a bull trade and scalp it higher, I don't know where it's going to go from here. Big question mark today. But the idea is if you don't know where market's going to go, or you know that markets at least will be flat or at least going nowhere, a credit spread is a great type of trade to make, which means you buy calls to have the option to go long if it bounces at the level you want it to bounce if you're a bull. So the idea is that if I'm a bull right here, I want it to bounce there. So instead of buying calls straight up, I can buy calls and then sell calls to pay for them, to get them for free and actually establish a credit. The only way this trade loses, if I establish a credit, say that I sell enough calls and I buy calls with it, that is a fixed, it's a fixed amount that I just mentioned. So if I sell calls, I'm going to make at maximum X dollars. If I buy calls, I'm going to spend at maximum Y dollars. If Y minus X is positive, then I've established a credit. If the market goes anywhere below this level, then I make that full credit as profit. If the market is down here, I just make that credit. If that market goes and these calls are in the money, not only do I make the premium that I sold here, but I make a little bit off of that delta here. So ideally, when you're outside of the band selling a vertical credit spread like this, is a trade that if you bounce anywhere inside of the band, then that's maximizing your gains. The only way that you lose this trade is if you go above this band and higher. Does anyone understand how options trades work? This is not explaining physically losing or making this trade. It's too late to do it. This is just explaining the mechanics of a credit spread. Do we all understand how that works? This is a fixed amount spent. This is a fixed amount spent. The only time you lose is if this goes up in here and these calls go in the money, and then you can be exercised on, or these calls are losing money faster than these calls have made money, if you get some kind of effect there. So this trade, I would exit the sold side or the sell side of the options. If this goes in the money here, I would just close the sell side of those options, and these calls had made money, and I was able to buy the dip or exercise along there, or just ride the calls and close the whole trade out. Either case, that's how that works. So in the style of trading, when markets are irrational to the downside, selling calls on the upside and buying calls in case you break into the band is the appropriate trade using like our style of analysis. Does anybody understand how that works? And if you have any further questions, we can detail later. I'm going to get back to my team and start trying to work on getting our servers back up, and then we'll be able to demonstrate the platform. If not, we'll be front and center live tomorrow. Things should be back to normal. And we thank you guys for tuning in. Remember to subscribe to the stream. We do training every day. We'll get back to y'all later on a Zoom call if the platform's up, and we'll do a session to train over that. And then we'll show you guys some other tricks and tools. There's a free trial, so get in it tonight. Rocketscooter.com will have a free trial at the top right of the page. You can get it. It gives you your data feeds. You lock in the half price for life discount. $100 a month, no price raises, nothing if you subscribe before your trial is up, which should be great for you guys to actually get in at a very, very kind of low introductory rate that will never have a price raise for you. And a lot of people are doing that, as we've got a huge wave of subscribers coming in over the last month. And we love having you here. We're going to train you guys on trading, risk management, all the things that you're never given when you got started. So hopefully you can find your new home here at Rocket Scooter. And again, all the people that are on the spaces with us today, all fantastic providers. They're all educators. And as the months and years go by, you guys can not only learn from us, but learn from our panel, like all the folks that you saw today. Adam Cash, Luke Donay, you got SoFlo Trading, Vegas will be up here one day, A Stocks will be up here one day, Ashton Nolan will be up here. Now all these folks teach different styles of trading. So the idea is to identify your actual market conditions, which we will help you do. And then once you do, you have an arsenal of styles of trading or an arsenal of rules to tell you to sit out. Either way, it's not just let me pick up, let me pick down. That is the failure mentality to trade, because most market days, especially in bear markets, don't go up or don't go down. Most days will likely just move around and be volatile and kind of stay put like today. And you see a lot of that. And so knowing how to identify and trade that before the market starts. Today was a perfect example of a play-by-play. We literally called this from the moment the market opened, said irrational. Here's the setup. I drew this early at the stream while I was live on that podcast, and kind of detailed how I would trade an expected irrational, non-directional, not shorting there, not longing there, but knowing that the market would go nowhere and establishing the proper type of trade that has manageable risk to go with it. So if you don't understand the mechanics of that, like we could teach a lesson on that later, but I'm going to go ahead and close the stream down. We love having you guys here. It was great. We'll have everything back ready to go for y'all tomorrow. And then of course, after this, we will kind of go back to the Discord and chit chat there. So love you guys. Thanks for tuning in. And of course, try out that free trial at rocketscooter.com. I'll put the link up at the top. And from here, you can check out the free trial. There's no credit card, nothing to lose. We can't charge you at the end of it. Just check it out, play with it. You won't be disappointed, we promise. And you'll have a great time, hopefully. And we will see y'all later today. If not, we'll see y'all tomorrow. Love y'all.